Broadcasting from beautiful, tropical Vero Beach, Florida, it's Money Nation with Ed Gardner.
Good morning and welcome to Money Nation. Today's special guest is Joe Cunningham from Worldview Capital. Joe, how are you?
I'm doing great, Ed. Well,
thanks for being with us.
I started the morning out. I started doing great, and as the day's gone on, I'm becoming a bit more despondent.
Yes. Let's talk about the market.
Sure.
3 bad days in a row. What do you think's going on? I think the Nasdaq's off 30% from its high.
Yeah.
You got the S&P down at 17, 18, 15, 16 on the Dow. What do you think's going on?
Well, I think we're in that period of adjustment, and we're in in some respects, uncharted territory. And in others, we've kind of seen this play out before in the early 1980s. So I'll tell you what I did this morning as markets were teetering. I got together with my team, and none of whom were around in the 80s, of course.
Of course.
But who knows, Ed? We might get the call from the bullpen to come back in and apply our wisdom and save the day here. But so I was thinking, what is going on here in terms of the longer cycles of things? So I instructed the boys to go take a look at the Elliot Waves, right? Because those are the longer term. Remember them from the 1980s?
Of course.
They're back.
They're back. Tell us about them. What's happening with the Elliot Wave?
We haven't been in this environment since then, right? I mean, there's guys that, haven't seen inflation 8%. We're talking top line number biggest in 40 years. So there's something going on. And I just thought, it came to me this weekend. It's like, we got to take a look back and just see what is happening. And so our back of the envelope rough sketch of it is it's not over yet, the selling, unfortunately. And I would say that there's another leg down. In particular, we're looking at the technology side on NASDAQ and how that could pretty easily end up at 10,000. And so the Dow would correspond, or the S&P would correspond somewhere down another few percentage points. So I don't think it's over. I do think that it's probably, there is a lot of noise in the market right now. So we, on the inflation side, we follow the tips, right? We've talked about that before, the 5-year tips, which is an indexed adjusted treasury rate. And they've only ticked up a little bit. It's trading about 310 today.
What was it back? What was it back in the winter or fall, even when we talked about it?
Yeah. So,
250
it was down in like 2.6,
Okay.
so yeah. Like now that's the institutional side of the house, right?
For our listeners, just explain the tip one more time. So
Sure. Of course. So the tip is an inflation adjusted yield, on a treasury bond. So it's indexed to inflation. And what it enables it's not a zero coupon, but it's a fractional of a coupon. So the traders are able to gain a real return above inflation on the index bond itself, right? And it is very much an institutional crowd, and they're still pretty calm over there. And so on that side of the house, the institutional side of the house, they're not freaking out. On the CNBC side of the house and some of the retail side, they're kind of having a bit of a
it has been pretty slow and orderly. There's really been a lot of people say, let's get some blood in the streets. Let's get this over. Let's start again. It's been kind of slow and steady, which some people don't think the end is here until it gets a little nasty. What do you think about that?
You wonder, and you're better than I am at this. Where's the capitulation point? How's the market going to respond? A lot of this gets into, the Fibonacci, voodoo, and some of these other things that we, the technical traders will look at very seriously and correctly, and make a determination that we're at a or near a bottom, and maybe it's a good time to buy. But so I'm letting Ed and I know we're on a radio, but for your viewers to know that I'm letting my shirt do the talking for me. This is a gold shirt, And
Gold. Oh yeah, gold's a great
oh
call.
yeah, baby. I wore it especially because it's got $100 bill stitched into it.
Oh, you're gonna have to see the YouTube version to watch that, but that's a nice
That's
shirt,
right.
Joe. $100 bills on the inside of the shirt. Very interesting.
Just one.
Just one. Okay.
So so gold's probably for those looking for some peace of mind and some that want to sleep at night. Gold is still probably not a bad place to be, even though it was down $43 here today on June the 13th.
Yeah, it's not getting down towards 1,800. Was almost at 2,000, but the gold stocks overall have been pretty good this year. I mean, the energy stocks have been on fire, but the gold, I think, as of Friday, was up 3-4%. So that's an asset that if you had in your portfolio, you like part of your portfolio in this market to get 3%. So that's what it's there for, and it has performed pretty well. You still like it going forward, though, too, right?
I do. I think a $2,000 handle is probably not unreasonable, especially with the noise in the market right now. But everybody should probably own a little bit.
Well, it's acting as a hedge. People thought Bitcoin would be a hedge. Bitcoin is getting slaughtered,
getting killed.
All of them are. So they were, I think, and some people were hoping they would be an investment that would counter a downward stock market.
Right. So Bitcoin's down about 63% off its highs. Here's one of one of the exchanges today put a freeze on withdrawals. I'm sure you saw that, Calculus or something like that. But here's what you need to do when even with Coinbase, if you're in one of those exchanges, the fine print that we never read, right? That I read on the Coinbase thing. Right. Is that they actually take agency over your wallet, right? So you want to be a little careful. Like I have a wallet that's independent of a exchange, right? The exchanges, when you're into Coinbase, they can freeze that. They could even own it. They are taking a de facto ownership position in your wallet. So it's a little funky. And what happened today with that?
Was there any issues of getting trades off in Coinbase?
Yeah, well, there are issues of getting trades off. That's the point, which is why that company froze.
Not a shutdown like Robinhood had last year, nothing like that, right?
No, nothing like that. No.
Okay.
So, but that agency issue is an issue. So, but just on the sticking with the theme of inflation, just one of the areas that central bankers use to guide their decision making is called the Taylor rule, and it's this guy out at Stanford came up with this rule that where interest rates should lie relative to real inflation. And generally speaking, you want interest rates in a time of accelerating inflation to be about 2% above the inflation rate. Now, the problem with that, obviously, is that inflation headline figure at 8.1%, whatever it is there, you would have to have interest rates trending towards 10%.
Yeah.
And as we see with the tips, the institutional market thinks it's going to be more like 3-ish, kind of percent. So there's some disconnect. That's a rules-based method for managing central banks. That's what the Taylor rule prescribes. And it's used, in normal times. So these aren't normal times. In fact, they're almost unprecedented in many respects because we have won a war, right? Two, we had the COVID disruption to everything, right? And with that, we had the central banks around the world flood the system with money. So we got a ton of dough and it's still out there. And then we had the supply chain issues. So even right now, there's truckers. There's a huge trucking strike in Korea that's mucking up the works. China is still in lockdown or quasi-lockdown, and that's going to continue to muck things up a good bit. And think of it like if the Teamsters were to go on strike right now, right? Just think how bad that would be. And we depend on Korea for an awful lot. They're a big trading partner of the United States. And, when their truckers stop moving goods, it's a problem. So these things just seem to be exasperating themselves and building on, one misfortune after another. And it's going to, we're just going to be in one of those periods that, of deep discord within the market itself and within the economy. So what can the White House do about it? Not a lot. They can make a lot of noise, but I don't see a whole lot of joy coming out of 1600 Pennsylvania Avenue.
That's for sure. So what's going to happen, since probably they're not going to see any change of pace, what's going on, or change of direction?
What we would like to see happen is for the supply issues to work themselves out. Now that the problem with that is, in economic theory, that's what you should do. You should just leave it alone and let the market take care of itself, and it will. But the timing on the political side is tenuous, right? Because you've got the midterm elections coming up. You've got a lot of noise in Washington right now. The White House has to be jumping up and down and calling it progress on inflation, or they're going to be seen as doing nothing. So it can get a little bit worrisome. You've got still a relatively young administration. They don't really, you had people that went into key departments that are not necessarily qualified for those departments, and they're going to the political appointees. They're going to have to figure out how best, especially on the transportation issue, to unplug the system. You still the wait at the Port of Los Angeles is still ridiculous. At Savannah and Charleston and up and down the East Coast, it's still it's not working for the consumer. Case in point, if I may digress just a bit, is tennis balls. So
what's going on with tennis balls? I know you got a good serve.
I had to go to 7 different stores to find tennis balls, and we were told this is so we got into it with somebody at one of the stores. This is my wife and I. I'm trying desperately to beat my wife in tennis. I think probably by 2024, 2025, I'll be there.
You're getting close, right?
I'm getting close. So there's a rubber tree shortage. So just on top of everything else. So tennis balls prices are up and supplies are down.
They 7 stores. You went to that Dick's Sporting Goods.
That's where we finally got them at Dick's, and the bins were almost empty. But we, Dick's is kind of a drive for us, so we went to the usual. We thought we'd get it at Walmart or Target, and even Walgreens and CVS. They used to carry stuff like that. They can't get them.
Yeah, nothing going on.
But the rubber tree shortage is very real.
So that's got to affect tires and tire prices.
Tire absolutely. So they have found it more profitable to grow palm oil, and so the plantations around the Indonesian, Malaysian, those kinds of places are replacing the rubber trees with palm oil trees, and so they can't get the raw materials to make the tennis balls. Hence, I'm driving around on a Saturday afternoon to 7 different stores.
You're wasting your weekend trying to get tennis balls, Joe. We know there's big problems out there in the world. Hey, we're going to take a quick break here, and we'll be right back with Money Nation. Again, listeners, any questions about your portfolio, anything you want to talk about at all, always feel free to give me a call. We'll be right back.
All opinions expressed by Ed Gardner and or his guests on the Money Nation show are solely Ed Gardner's and or his guests' opinions and do not reflect the opinions of Cutter & Company or any of their affiliates. You should not treat any opinion expressed by Ed Gardner and or guests as a specific inducement to make a particular investment or follow a particular strategy, but only in as an expression of their opinion. Ed Gardner's and his guests' opinions are based on information he considers reliable, but neither Cutter & Company nor affiliates and or subsidies warrant its completeness or accuracy, and it should not be relied upon as such. Always talk to your financial advisor before making such decisions.
Welcome back to Money Nation. Joe, talking about the White House and people being appointed to certain positions that really have no business being there. I was talking to a good friend of ours, private equity energy guy, retired, but railroads trillions of dollars in that space. Talking about Jennifer Granholm, the Secretary of Energy for the United States. I did not really even realize that she has really no energy experience whatsoever. So I Googled her earlier today. She's a smart lady, smart woman,
Sure.
Harvard, became a lawyer. She was a U.S. attorney, assistant U.S. attorney, became the first female governor of Michigan in 2000 or 2002, and then became a CNN TV personality, current TV and CNN. So you've got basically a governor, former lawyer, governor, TV personality who's being put in charge of the energy of the United States. I mean, that is just beyond me. I don't understand how you could put someone in there. You put a judge, a Supreme Court judge, who's never been a lawyer or a judge before, put an auto mechanic, the guy's the head of Speedy Mufflers. Is the Speedy Mufflers guy going to be the head, a Supreme Court judge? It's crazy that she's in there, and you know, you can see we have problems. Maybe it's got the people who are making the decisions in there. What do you think about that, Joe?
I think you're onto something. It's look at the two real key areas we have today: energy, right, and transportation. You've got two neophytes in both departments. Jennifer Granholm, who you mentioned, and Peter Buttigieg, who is a mayor of people will know he ran for president on the Democratic side. He lost in the primaries, but you know, he was a mayor of South Bend, Indiana. And for my relatives in South Bend, which is the home of Notre Dame, by the way, go Irish. For my relatives in South Bend, he wasn't even a good mayor. You know?
Oh, geez, yeah. And then now he's head of transportation.
And now he's
how
head of
things work in
the
this world.
transportation department. That's right. So, you know, he doesn't know, you know, one end of a container from the other. That's a trick question because they're both the same.
That's good. That's good. But yeah, he probably wouldn't get that question. They asked her a question. There was an interview, and they asked her about how are you going to deal with high prices of energy. And Jennifer Granholm's response, and this is my private equity friend telling me, her response was she laughed. She laughed. She goes, "What do I have? A crystal ball or something?" That was her answer. Like she just has no clue what's going on. If you're asked about raising energy prices, if you're the Secretary of Energy, you're going to say, we're going to do this. We're going to do this. We're going to do this. In the past, we've done this. Not laugh and say, I don't have a crystal ball, but she doesn't have a crystal ball and she's got no idea what she's doing there. So that's going to be, I think we're going to have continued problems in that. But what do you think? What do you think, Joe?
Well, I think it will, the tail of this is really as we get into the winter months, right? And as we start to get down the calendar, you got the summer driving season here. You know, it's stupid to fill up. You know, you used to be $35-$40, fill up your car. Now it's 80 to 100. And that's real money.
Or more.
Yeah, or more. Yeah, I mean, that's real money. All of a sudden you go from, you didn't even think twice about it to, it's $100. I could do a lot with that.
You know,
so yeah, I mean, they should, they got to go back to the game plan we had in the previous administration where we were working towards energy independence. But even then, you know, we're still a net exporter of energy. So maybe we don't need to be a net exporter. We need to look at coalescing around our own energy supplies for our own people. They always say that oil is fungible, right? So it can be sold, you know, oil drilled up in North Dakota can be sold in Europe, right? The reality is I know that my oil gets pumped down from North Dakota to a refinery down the road here, and I'm filling my tank up with, you know, U.S. domestic oil. I know that. And so it's not really fungible. It's a myth of it being fungible. We don't have to necessarily be tied to the price of oil in the North Sea or in the Persian Gulf. You know, we have our own ability to generate our own energy, our own carbon resources. But I do think that, you know, in some respects, and we talked about this before, that this administration wants gas prices high because that's going to get you into an electric vehicle. And that's really where, you know, the car market is certainly
they do want that, but I don't think they want it too high. You know,
that's not in an election year.
That's going to cost them some votes. You know, I think you're right to a degree. Now, the problem is, and they go back and forth, you know, saying the White House, like, oh, we issued all these permits, you know, but there's many other permits on other sides like transportation, refining, they haven't issued. So they're issuing some things, but they're not issuing other things. The bottom line is they're drilling less today than they were before COVID. So there's clearly restrictions on drilling, and that's why you've got prices going up, and they're not really changing their prices. You know, the other thing that my friend Steve said was, he goes, it's, if people are worried about filling up the Suburban or filling up your car, that's not going to be the problem in another 5-6 months. Wait till wintertime. Natural gas. He goes, $8-9 natural gas. Wait till you got to start paying your heating bill. That's going to be even maybe more brutal than filling up your gas tank. So who knows if we're even close, we could be in for even more pain. You know,
with your quite urgently trying to cut off Russia as their natural gas supplier, I'm sure that the U.S. has made all kinds of promises that they will fill the void, that we will fill the void, right? So it will be interesting at the margin to see how that affects energy prices going into the colder months. And I expect and agree with your friend that it would be negative, very negative. But they will be exporting gas, LGN, to Europe, and that will be an issue. But Europe's also got to hop on board and get their renewable side of the house nailed down and do a little bit more with a little bit less. They've had a pretty easy ride here for a number of years, and it's over.
Yeah. He said you'll see high energy prices for the foreseeable future, years and years going out. The only thing where the prices may fall if you had a really, really bad recession when business stopped. Besides that situation, which would not be a good one, these are going to be around for a while. He talked about who've been the funders. He was in the energy. They were private equity firms, so they bought and sold all kinds of energy and wells and whatnot. But he said the drilling has long been a regular way investment, and I didn't know what he meant by regular way investment. But that's the main New York State pensions fund, Harvard funds, California. They were
consistent yield.
They were the big guys putting money into the drilling. Now they have outright banned drilling in those funds. So the people that the big money that used to fund drilling isn't even there anymore. You got smaller operators and whatnot happening there. But it's interesting how things have changed. And I think the big oil companies are hesitant to go ahead and build out because this administration is trying to put them out of business. Yeah. This administration told the banks, don't lend money to energy companies. 2 years ago, they had their worst year ever, or one of their worst years ever. And the administration said, banks, don't loan these guys any money. Hope they die. And now they're coming back to them. They don't have that long short of a memory. And I think you're going to see more. That could be, it's pretty tough when they're asking you, hey, please increase some production. Then we're going to put you out of business later on, Right. So
here's tough. The thing. Long and short of it is, not many administrations around the world can survive with oil at $120 a barrel. Not in the short term here. Yeah. And this one may be one of them that doesn't survive $120 a barrel. So they may get this. That attitude may come to bite them right in the backside, and I expect it. If it doesn't cost them the Congress, it would cost them the presidency in 2024.
They said one of the things you could do is you could put a floor in the price where the government would buy any oil under a certain price, maybe 90 or something. And that would really help things out because then they would know the government's behind it, to buy for the reserves or things like that. But they won't even do that.
A variation on that theme is you can just guarantee a rate of return to the finance providers. You can say to them that, we'll put a floor on your rate of return as opposed to a floor on the market. Right. Well, you'll make your money. Because that regular return is, the yield that the pension funds need to return to their stakeholders on an annualized basis, or however they calculate that. Right. And if you can guarantee, if the government may not even have to, but if they can guarantee that you're going to make your regular return, then that would be a cheaper way of stabilizing that market. But we'll see.
Joe, did you see the news on artificial intelligence? Google, they fired one of their head guys on artificial intelligence. And I guess this gentleman, I guess he's an expert of some kind. He claimed that the AI robots had a soul and had feelings, and they could be smarter than people. Yeah, that's not a joke. They actually had a guy who said that, and he's been removed. What do you think about robots with a soul? Robots that are smarter than us?
I don't know about if they have a soul. I think that guy might be a bit delusional. But I did speak with this morning a friend of mine who is in that business. I sent him the article, and he sent it back and said he's the one who told me this guy's out of his mind. He develops his company. I can't say their name right now, but I could get them on your show one day. They're real interesting.
Love to have them.
They're putting they are putting bots, voice bots into drive-throughs. So if you go to your, I don't know, Starbucks, McDonald's, wherever, you're going to be speaking to a bot soon enough.
There you go. So get rid of a couple people. Have the bot.
That's right. They're more efficient. The language, natural processing language skills that they've acquired are, tremendous in terms of their ability to discern accents and have real conversations with people. So when you pull up very soon, you're going to be speaking to a bot, and that employment sector is going away. It's just going to vanish.
I wonder what will happen if you ask the bot how their day is going.
They'll respond.
That was fun.
Having a great day. My circuits are clicking.
So how's that implementation going? Is that
Really
happening
well.
throughout
They
different
have,
large
they have-
chains, small
they're doing-
chains?
The company's doing a financing round right now. They've got an anchor investor. They're trying to round it out right now, and they're
Will they be in
expect to
McDonald's
in-
and like big chains though, or all?
Oh, yeah. Not McDonald's. I can't say the names of the chains, but they're going to be everywhere. This company has got a very high ceiling.
Listen, it all comes down to the balance sheet and the income statement. If they could save money some way and get rid of a couple people, and guess what? The bots won't call in sick. They won't have to go home early. No. And they won't have any other of those problems. But things are changing. Hey, Joe, nice talking to you.
Always a pleasure.
And we'll be in touch with you soon again. And as you're our usual guest speaker on Money Nation, always love to have you.
Great.
Investors, listeners, thank you very much for being with us. Have a great day, and thank you for being with us on Money Nation.